Hey, what's going on, guys? I thought I'd make a quick video here about the Canadian housing market. So I just want to go over a few charts with you guys, and I want to make the case for why you're being duped. You think your house is going up in value, you think you're making all kinds of money, and I'm going to make the case why that is a lie. You're being lied to, and you're being fed a bunch of BS that's not actually true information, and they want you to believe your house is going up for many different reasons that I'll discuss in this video. But if you haven't already, please like the video, subscribe to the channel, share it with some friends and family. I discuss stuff like real estate and the economy and just kind of go over some of the information that not a lot of people are talking about. So I'm trying to help expand your mind and understand a little more, go a little deeper with the numbers in the economy so that you can make better decisions for you and your family and create a little more prosperity. So with that being said, let's get right into the video and I will make my case as to why the value of your house going up is mostly smoke and mirrors. It's a lot of it is an illusion. And the reason that governments want to do this is because, first of all, they get to base the country's GDP off of the value of houses rising. So when they get to boast their numbers to other countries, it looks good for the country when the numbers are going up and they basically get to say, oh, look, every Canadian owns their home and their homes are worth, $1 million+. So our country's, we're doing so well. We're all millionaires. We all have all this equity. So it looks good to other countries and it kind of creates this false illusion that we're a lot richer than we are. And who gets the benefit from that? Not the homeowner, really, because those aren't realized gains. So they're being fed this idea that their home's worth that much, but can they actually go and sell it for that much? And there's a few other factors that I'll get into later in this video. But one of the key things that the governments why they want these home prices inflated is because they get to base your taxes off of the value of your home. So you're not winning by your home being valued at these astronomical levels, but they are. They get to tax you more on that value of the home. So they win, you lose. And you lose because basically you're fed this illusion that your house just, well, I'll show you a chart from Vancouver's home prices where basically they tripled in value in just over 17 years here. So just astronomical growth. And basically they tell you that, oh, look, your home went from 600,000 to now it's worth 1.8 million. So you think you're really rich. Everyone's, they think they're sitting pretty. They're entering retirement in the next bit and they're looking at their home. They're going, oh, my house is worth $1.8 million. I'm a multimillionaire. So then they feel good. They feel like they have all this money, so they're spending more. They're working a little less. They're not saving as much because they think they have all this equity in their home that they're just going to sell and downsize, and then they're going to be able to put a million of that in the bank, buy a little condo, and buy a bunch of other toys and fund their retirement that way. But the numbers are skewed. The main reason for this crazy increase in home prices is the debasement of the Canadian dollar. So it's taking more and more of the Canadian dollar to buy the same underlying asset. So I'll show you in some charts here why that is and how you can see it in the charts when you dive a little deeper. So most people don't really take it that step further. They're not looking at how much currency is being created. They're not looking at true inflation levels, and they're only valuing their home in Canadian dollar terms or US dollar terms. So they're buying into this illusion that their home prices are going up so much and that they're sitting a lot prettier than they are, when in fact the home prices didn't really move that much at all. It basically was just more of a debasement of the currency. So in currency terms, yes, it takes more of that underlying currency to buy the house, but in actual terms, the value of these homes didn't really go up. So with that being said, I'm just going to show you guys a few charts here, just having my morning coffee. Let's see here. So here is a chart. If we look at this, this is average price of a residential home. So you can see here we have the top chart here in the blue. This is detached homes. So this chart is dating back to 1977, where the average price of a home was, it looks like about $50,000. And now if we fast forward to 2020, we had the peak back in 2019 here with the average price of a detached home coming in at $1.8 million. So if we do the math there, 50,000 into 1.8 million is 18, it's 36 times. So you can see the price of an average home climbed 36 times. So 3,600% in a little over 40 years. So in 43 years, we had prices climb 36 times, which is just unbelievable. And so if you see this little blurb on the side, we're talking about since the Olympics in Vancouver in July of 2003, we had the one here on the left is the average price of a detached home. So that climbed 285%, where the average household earnings only climbed 64%. So as we can see there, the earnings of households, they're a quarter of, they increased by a quarter of what the actual home prices did. So what that's doing is it's basically squeezing out your disposable income. It's hurting the middle class, and basically more and more of your money is going towards trying to own your home. So that's, you can just put things into perspective when you look at this chart. So when people see this, oh, average price of a home, they think, oh, wow, real estate is a no-brainer. Look, it's a win-win. It only goes up. You're only making money. And they look at their home being worth 1.8 million, and then they think, wow, I'm a multi-millionaire. I'm so smart. Look, I'm doing so well. May as well spend all the money. Let's pull some of the equity out on a home equity line of credit and spend it because we're sitting so pretty with all this capital we've made. But if we dive a little deeper, let's just look at this next chart here. So this is the Canadian money supply chart. So going back to 1970, you can see it's just kind of coming along at a pretty normal rate, right? And then we had '08 happen right about here. And then the chart really started to tick up, and you can see it really started coming up. So they're trying to paper over the crisis by creating more and more of the currency. And the way they get this into circulation is through the form of debt. So they lend it out to people through the form of mortgages and whatnot, and they also give it to the big banks and the big hedge funds and the big investors at next to no interest. So these people get to place big money bets with little to no downside risk, and you and I have to work for the money and sign our lives away to get access to it. So then you can see in 2010, it just started really ramping up the amount of currency because we had the '08 crisis, and basically what happened is we should have crashed then. The economy, if it was free market capitalism, the economy would have corrected here, and house prices would have started to come down. So if we go back to this chart here in '08, that's right about here. So you can see it did start to come down, and this is what should have happened if the government stayed out of it. But no, they like to get involved in all this. They like to meddle in markets. They like to play God and try and get their greedy little hands involved. So you can see it started coming down, but then what happened when they ramped up the currency printing? The prices just started to climb to keep up with that. So people started asking more and more for more and more of the currency for that home because the currency was easier to get. There was more of it in circulation. So of course you're going to ask more for more of it for your home. So you can see that chart really follows this chart. So after 2010, the money printing just went crazy. And then you can see 2020 hits, and we've just started to go straight up. So I don't even think this is up to date. We're probably way up here now, but the currency creation is just through the roof. So they're debasing the currency, and I can show you that in some other charts coming up. But you can see this also goes hand in hand with interest rates being at the lowest they've ever been in history. So I don't have, this doesn't go back really far, but if you go back through a longer time period, this is the lowest we've ever seen it in history. So essentially what they're doing, they're giving the money away for free. Essentially, we're just above 0% here, and still the economy is barely hanging on. And that's the only thing keeping this whole Ponzi scheme, the whole economy going, is this cheap money. So you can see that the thing that this does when interest rate is near zero, it punishes the savers. So the people that are actually productive and frugal and are making more than they're spending, and they're saving more than they're spending, those people get punished here because they're not able to earn any money on the money they earned. Oh, sorry about that. This thing is funny. My messy kitchen here. So yeah, back in the day, if you look at the boomers, when they saved 100 grand, the average rate, if you look back over like 50 years, the average rate is 7.7, I think. So if you saved 100 grand, you were able to earn 7% a year. So $7,000 on 100 grand. But nowadays, if you earn 100 grand, not only are you not earning money, but the inflation is actually at about 5%. So you're losing 5% a year. So in actual terms, you're going backwards by 5% a year instead of going ahead by 7. So you can see why the wealth gap is growing between the rich and the poor, and the middle class are getting destroyed because you can't earn any money on your money, and in real terms you're actually going backwards. So that's just showing here that the only way they're keeping this whole thing afloat is by basically making the money free. And you're seeing that now, where I've been telling that to people for some time, that they're actually going to start giving the currency away because people are maxed out on debt, and so they can't get it into circulation. As you can see here, they're printing it like crazy, right? But they need to get that money into circulation. And when they have, all the borrowers are already maxed out on their debt and they're giving it away and they can't find any new victims, well, how do they get it into circulation now? And if they don't get it into circulation, then we enter deflation, which is very scary for these Keynesian economists, that we could enter a deflationary spiral where consumer prices just fall and fall and fall. And they don't want that. They're trying to inflate the money supply. They're trying to create inflation because they also want to inflate away the debt. The governments owe a ton of money, and so they want inflation to inflate that debt away, to make it easier and easier for them to pay off that debt. So you can see their desperation here. They tried to get rates up over the past few years. They inching it up, and then bam, right back down. The market wouldn't support it. So you can see what's going on here. They can't even get, they're trying to give the currency away now through the form of CERB. Here in Canada, $2,000 a month, they're basically giving to, I think it's 7 million Canadians are collecting it or something like that. So pretty wild. And still the economy is just barely hanging on. So now they've got everyone maxed out on debt. So now the only way they can try and create inflation and get this phony money into circulation that they're printing is to actually physically give it away. So that's why we're seeing CERB, which will, in my opinion, be rolled out into UBI, Universal Basic Income. So this is the start of UBI, and this is what I've been talking about for some time. People thought I was mad when I said they would start to give currency away, but here they are. They're giving it away, and you don't even have to work for it anymore. So here we have household debt. So you can see as the prices of houses climbed, for your average homeowner, what this meant is everything's getting more expensive. So your property tax is getting more expensive. The cost of buying into the real estate market is getting more expensive, and they've been devaluing. So you can see here, whenever they create more currency, it devalues it because there's more and more in circulation, and there's still the same amount of goods and services. So the currency is devaluing. And how do people keep up with this rise of cost of living? Basically, they start they start borrowing. So you can see back in 1992, this is a percentage of the amount of disposable income you have. So basically, at 100%, that means for every dollar you have of disposable income, you owe a dollar. So basically, this is the break even point. This is where you owe as much as you have, So that the last time we were there was back in 1998. So for 22 years, we've been way overextended. We owe more money than we actually have. And you can see this debt level just growing and growing and growing. People trying to keep up to the rising cost of living. So they're maxing out credit cards, they're taking out more and more debt through the banks, trying to make ends meet, trying to afford this highly overpriced real estate. And the only way they did that, this chart clearly illustrates it, is through borrowing and yeah, just increasing their debt levels to try and afford this. So the US, when they crashed in '08, they hit a level of 138 and their economy could no longer support it, and they reverted back to some more normalized levels down here. The Canadian economy kept going. We were fed this lie that the Canadian banks were in much better shape, Canadians were in much better shape. Keep going, keep borrowing, you can't lose. Canadian real estate is a no brainer. It's going to be like Europe, it can only go up, blah, blah, blah. So people kept borrowing the money to get into the real estate market and buy into the North American dream of home ownership, and to try and they basically had the FOMO, the fear of missing out, as all the homeowners in Vancouver, as we saw in this chart, the prices just went nuts. So everyone wanted a piece of that. So everyone's trying to keep up with this rise in prices. So they're borrowing debt to try and get into the market. So this chart clearly illustrates that. If we go to the next one here, this is just showing that the governments are also racking up the debt. So this is, as you can see, it's going at a normal level here back in the 60s and even through the 60s into the 80s. Pretty normalized level, increasing level of debt, nothing to be worried about. And then 1980 hits, this is where we start to get concerned. The governments just start going in insane amounts of debt. We had a little bit of a debt downturn here, and then bam, ramping back up. So it's not only consumers, it's also our government that's in just crazy amounts of debt. Everything is highly leveraged right now. No one actually has cash. Everything is just on borrowed money, borrowed time, promises that we'll pay this back in the future, which people are basically placing the bet that it's going to be easier to earn this money in the future than it is at the current day. So to me, that's a very risky bet because the future is uncertain. And now, of course, with the black swan of COVID hitting, we can see that it might be the case that it's actually a lot harder to earn the money now in the future than it was in the past. So now we have all these obligations, all these debt liabilities that are essentially we've agreed to. So we at some point this money has to get paid back, and now our economy is downturning. So to me, that's going to create a lot of downward pressure. I think we'll enter a deflationary period because of these debt levels. And so if we're looking at the dollar, basically the way I like to, when I tell people that the Canadian dollar is in big trouble, they give me this puzzled look and they say, "Oh, what do you mean? It's not doing that bad." And of course, they're comparing it to the US dollar, which is also a falling dollar. The currency value, the purchasing power of the US dollar is also falling. So it's not a good thing to compare it to. So if we want to look at the Canadian dollar or the US dollar and we want to see how much value it's holding, we want to compare it to something more stable that actually isn't inflated away at insane rates. So the thing to compare it to is gold. And I've discussed this in previous videos. So if you want to realize why we compare it to gold, look back through some of my videos. But gold has a set inflation, or it's a known inflation, where we can't just flood the supply like we do with the Canadian dollar. So we can't just come in and just, um, like here, we basically 6x the money supply in 30 years. Bam, right? You can't do that with gold. The gold inflation rate is about 2% a year because you actually have to physically mine it, and there's not that much gold around. So it's not easy to inflate the supply of. So where you can see the inflation level here, I think it's well over 5% a year if you actually look at it. And that this isn't accounting for inflation. This is just strictly the money supply inflating. But there's other metrics that come into this. Excuse me. So if we compare it to gold, let's just look here. This chart only goes back to 2009, so it's only 11 years. But you can see what's happening here with the value of gold. It's going up and up and up. So it went up and up and up. We had a little correction here, and then again, it's just been climbing slowly but steadily. And then this is just since last year. So the banks, this chart also shows me that the banks actually, they knew this was coming. They started buying gold. This is part of the reason why I think this whole thing was more orchestrated than people like to believe, because look, you can see here. This is in October of 2018. So the banks, all the smart money, started getting into gold well before the crisis hit. So you can see gold surged to an all-time new high in September of 2019. So this is right before they announced the pandemic. So, how did they know that we were going to enter an economic crisis if the only reason we're in the crisis is because of COVID, and we didn't hit that until March right here, where you can see it's already in just ramping up and crazy buying. So this is just showing you, when you compare the dollars to something more stable like gold, you can see that the price is going parabolic now. And this is very scary, because if this doesn't slow down, this is starting to look like hyperinflation territory. So if we invert this chart, this is what is happening to the value of Canadian dollars. Bam, and now it's just in free fall. If this chart was a stock that you were invested in, you would be riding it down to zero. This you hopefully would have sold back here, and you hopefully would have got out before we enter free fall. But when you look at this chart, this is the monthly chart. There's no sign of this chart slowing down or turning around. We had a little uptick here, and that, but it basically, the chart is going straight down. So this is what's happening to the value, the purchasing power of your Canadian dollars. And we compare it to gold because it, like I said, it's more of a fixed supply. So you can see it's taking more and more of those dollars to buy something that has a fixed supply. So as you can see, all these charts follow a very similar pattern. Okay, so we have the price of any real tangible assets just starting to go parabolic. Price of a home. And look, all of those charts follow the money supply. So you can see, as they create more money, the price of the underlying goods go up. And also, so not only is the money going up, but debt. So you can tell that it's all debt money. They get it into circulation through the form of debt. So all these charts are very similar here. Going through, there's your poor Canadian dollars. So yeah, pretty sad if you're holding stocks, and this is the other thing. So you're being told that the value of your home's going up, but really it's just a debasement of the currency. So this, even though you sold for 4 times what you paid, the dollars are only buying you a quarter of what they used to. So in real terms, you may be broke even by buying into real estate. So that's why I'm making the case that even though your house price is going up in dollar denominated terms, in actual terms, you're lucky if you're going to break even. And the thing is, the backside of bubbles are often a lot worse than, so it's take the staircase up and take the elevator down. And basically, I think a lot of people are going to go to sell at the same time, and very few are going to manage to sell at this peak. So you can see a few people are selling here, and we did have a downtick, but basically this could correct really quickly, and very few people are going to sell the top. So by the time they end up selling, they maybe only doubled their money, but the money itself devalued by 4 or 5 times. So really you're at a net loss of quite a bit. You lost, actually, in the end, you'll probably lose about 50% if you're lucky. So that's just another chart. So right now, it looks like economy is returning to normal here, but you guys look at the chart. So unemployment, before this all hit, of course, they were boasting that our economy was doing so well. and look at everything. But we had the perfect numbers. We had almost record low unemployment. We had perfect job market. We had easy lending. We had record low interest rates, like I showed you in the other chart. And then bam, black swan happens. And look, boom, unemployment, record high, 14%. So, this hasn't come into the market yet. We're not done with this, you guys. The economy is not going to be able to rebound. People aren't going to be able to repay this level of debt when our unemployment is at record high levels. And also, look, the money, it's as cheap as it ever has been, and yet still people are struggling to keep up. So it's a really not a good picture. This is going to, a lot of the mortgages are in deferral. They're giving away the money for free. So we can see basically that's the only thing keeping our economy afloat right now. And if any of those factors come to an end, look out. House prices are going to tumble, stocks are going to tumble, and we're going to have a debt bubble pop, and we're going to have a liquidity crisis and all of that. So this is just an interesting chart. Basically, this is household savings rate. So if we look at that, it looks pretty normal, just going up and down. This is pretty normal for any kind of chart. And you can see just recently, just a couple of years ago, we were at a record low. So that goes hand in hand with the debt chart. People basically had no money in the bank. They were highly extended on debt and all that. And this chart to me is super interesting. Look how parabolic this goes. This does not look natural. Of course it isn't. And what this is all that phony money that the governments are printing, the helicopter money. They're just dumping it out of helicopters now, giving it away for free, trying to create inflation. However, there's what's called the velocity of money, which is the amount of money that's changing hands. And you can see that they've printed all this money to try and paper over this economic crisis. So we can see that in this big uptick in the currency creation. And they're trying to get it into the economy. They're trying to get people to spend to get the thing rolling again. But look, no one's spending it. It's all going into savings. So everyone's nervous and they're just putting it in their bank. And you can see this is a very unnatural looking chart. Bam, we hit an all-time record high in Canadian savings rate. So yes, I guess this could look good at a glance, but what that's showing me is the velocity of money is at an all-time low. They're trying to stimulate the economy with all this money creation with the counterfeiting of the Canadian dollar, but no one's spending it. They're giving it away and no one's spending it. They're all putting it into savings. So if they can't get people spending the money, then they can't get inflation. If they don't get inflation, they're going to get deflation, which is basically all prices are going to start coming down. That's why I think real estate is, I wouldn't be buying right now, that's for sure. Really risky place to be buying real estate at, just record high levels. And with all this debt out and the fact that they are printing so much currency and no one's spending it, everyone's nervous, and record high unemployment. Why would you want to buy at the peak of the biggest real estate bubble in history? It just doesn't make sense to me. I personally wouldn't be buying a detached home in Vancouver at these levels. There's so many factors that are going to put downward pressure on the market, and basically you can tell here that the money is no longer, you don't have to work for it. Helicopter money, they're just going to give it away. This is the new normal. We're going to move right into universal basic income because there's no way for the economy to return to normal here. COVID is far from over, and basically, they can't even get the economy to start to move again, even with all of this currency creation. So that's kind of an overview of what's going on. I hope that kind of puts things into perspective. I hope that makes a little bit more sense. And sometimes charts, I know for me, charts really just they help put things into perspective. So it just makes things a little more clear, and it's easier to see the numbers and really put things into perspective. We can see what's happening with the Canadian dollars. We can see how they're inflating the money supply, and that's really why the price of houses are going up. It's not the value that's going up, the underlying value. It's just taking more and more of those dollars to buy the same asset. So yeah, I hope you guys enjoyed the video. I hope that makes sense to you guys. Please share the video and subscribe to the channel. I really, I've been taking as much time out of my day to make these kind of videos. I'm trying to help inform Canadians, North Americans about what's going on in the markets, and trying to expand your mind and just dive a little deeper and look a little deeper under the surface. A lot of people just want to have their head buried in the sand and ignore these debt levels and all of that. But in my opinion, it's much safer for us to look at it realistically, and just that way we can make better decisions about what we're going to do with our finance, and if we're going to buy a home at these levels, if we're going to put our money into gold, into silver, whatever. Yeah, I hope you guys enjoyed the video, and I'll see you guys in the next one.